Welcome to the deep dive. Today, we're really digging into a fascinating story. We're talking about Shiseido, a global beauty giant, over 150 years old, and right now they're in the middle of this, well, incredibly risky-sounding internal transformation.
It really is high stakes. This isn't just, tweaking a few things. They are selling off huge chunks of the business, overhauling the culture. It's fundamental.
So our mission today is to unpack what's really going on behind their big strategy, this shift 2025 and beyond.
Exactly. That means looking at the pivot to skin beauty, these really different stories playing out in places like China versus the Americas.
And those pretty impactful announcements that came out recently, November 2025 or late 2024, depending on how you track it, some big financial news in there.
Definitely. But first, maybe just a bit of grounding.
Good idea. So, Shiseido started
Yes.
way back in 1872, Ginza, Tokyo.
As a pharmacy, interestingly enough, Japan's first Western-style pharmacy.
Right. And their mission statement now is beauty innovations for a better world. But it seems like honoring that mission today means making some pretty radical changes.
It does. Let's start with their core strength, maybe. Their science.
Ah, yes, the R&D. It's genuinely world-class, isn't it?
Oh, absolutely. You just have to look at the awards. The IFSCC, that's the International Federation of Societies of Cosmetic Chemists,
Right.
they've racked up 29 awards. 25 of those are the top prizes. It's kind of like the Nobel Prize for Cosmetics, and they keep winning it.
That's incredible. So the tech advantage is real. It's not just marketing speak.
Not at all. It's validated. And they've been smart about structuring it, too. Back in 2021, they set up these new R&D units.
The Brand Value Development Lab and the Future Development Lab.
Exactly. One for faster wins, one for the long-term bets. And this structure, this science focus, it leads to some surprising wins.
Like the NARS Foundation you mentioned before we started.
Precisely. The NARS Light Reflecting Foundation. #1 new prestige product in the U.S. back in 2022.
But NARS is mainly makeup, right? Color cosmetics.
That's the thing. The foundation did so well because it wasn't just makeup. It used Shiseido's deep, deep knowledge from skincare R&D, patents they'd built up over years.
Ah, so they put skin science under the makeup.
Yeah,
Clever.
very clever. Direct payoff from that R&D focus.
Good.
But great science doesn't automatically mean a nimble company, does it?
No. And this seems to be where we hit the internal challenge, the culture issue.
Yeah, and the internal documents are, well, pretty blunt about it. Management said the Japan business specifically was lacking a sense of crisis and agility.
Wow. That's quite an admission.
It is. You don't get to be 150 years old without some, let's say, organizational inertia. So they called for self-innovation, cultural change needed alongside the structural stuff.
And the most obvious sign of that need for change, I guess, was that huge portfolio cleanup in 2021.
Oh, absolutely. They basically decided if it wasn't core skin beauty, had to go, or at least be managed differently.
So selling off the personal care business. Tumbaka, Senka, those are big names.
Huge household names in Japan, sold to CVC Capital Partners. Though, strategically, Shiseido kept a 35% stake in the operating company. Smart move, maybe.
Still, a massive divestment. And then also selling off prestige makeup brands. Bare Minerals, BUXOM, Laura Mercier.
Yep. And terminating the Dolce & Gabbana fragrance license. It was a very clear signal. We're out of the general beauty game. We are prestige skin beauty specialists now.
Okay, so all this slimming down, this focus, it's all aimed at hitting some pretty aggressive financial targets.
Very aggressive. The updated goal is a core operating profit margin of 9% by 2025.
9%. And long term.
They're aiming for 15% by 2028 or 2029. That's ambitious.
15%? How do they get there?
Well, that 9% target alone needs huge structural reform. We're talking about a 25 billion yen impact on the cost structure.
25 billion yen. Just to put that in perspective for listeners, that's
Yeah.
hundreds of millions of US dollars in cost savings or reallocations they need to find.
Fast. Exactly. But the path isn't smooth. The global picture is complicated. Which brings us to the China situation versus the Americas. Quite different stories.
Let's start with China. It's been rough, but they seem, well, bullish.
Yeah, 2023 was tough. You had the Shanghai lockdowns, destocking in travel retail channels, and then those boycotts after the treated water release.
Right, that hit the influencers, the KOL promotions pretty hard.
It did. But management seems surprisingly optimistic. They're saying customer sentiment on the boycotts unexpectedly stabilized quickly.
Really, so they think it's temporary.
That's the view. Historically, they say these kinds of issues blow over in about a quarter. And importantly, even with the market being a bit soft, they are seeing growth in the high prestige segment.
Ah, so the expensive stuff is still selling.
Yes. And they were actually gaining overall market share in China in early 2024. Their strategy now is less about big, splashy, maybe low-return promotions,
And more about...
more about communicating value, focusing on high-margin products. So yeah, despite the bumps, China is still seen as the big growth engine.
Okay. Now contrast that with the Americas, because there's a big warning sign flashing there, isn't there, from that recent November announcement.
Oh yes, a major one. They revised the full-year earnings forecast downwards. And the reason? A huge impairment loss on goodwill in the Americas business.
Right. Goodwill impairment. So just to clarify for everyone, that basically means they bought assets, brands, companies in the past, and now they're admitting those assets aren't worth what they paid for them.
That's exactly it. They've had to significantly lower their expectations for future cash flows from those acquired businesses in the Americas.
And this isn't a small adjustment, is it?
Not at all. The total asset impairment figure cited for 2023 was $1.328 billion.
Wow. Over $1 billion.
Yes. That number tells you something went seriously wrong with one or more of their major acquisitions in the U.S. market. The integration, the performance,
Yeah.
it just didn't meet expectations. Drunk Elephant is notably part of that business unit, for instance.
So while the overall U.S. prestige beauty market is holding up okay,
Shiseido's specific acquisitions, there seem to be a major financial drag now. A big strategic misstep, frankly.
okay, so we've got China as the hoped-for engine, the Americas as a current, very expensive problem. That puts enormous pressure on the home market, Japan, right?
Absolutely. Turning around the Japan business is critical. It can't be a drag anymore. It needs to become a profit generator. The target is 50 billion yen in core operating profit by 2025.
50 billion yen. And the plan for that is Mirai Shift Nippon 2025.
That's the one, their domestic reform plan. And it's quite surgical.
Meaning they're not trying to fix everything.
They're being very selective, pouring investment into just 7 core brands they've identified.
And the others, the weaker local brands.
They're optimizing them, but also explicitly expecting revenue decline from those. It's a shift prioritizing profit margin over just holding on to market share in Japan. That seems new for them domestically.
Interesting. And they're counting on tourism coming back too.
Yeah, they're factoring in a recovery in inbound tourism, aiming for maybe mid-20% of 2019 levels by 2025. That should help those core prestige brands.
And technology plays a role too, this FOCS platform.
Right, implementing the global IT platform, FOCS, in Japan. That's about standardization, efficiency, cutting costs. Standard stuff for a global company, but important.
But the really sharp end of this agility push that came with another recent announcement, didn't it? The really painful one.
Yes. The Voluntary Retirement Program, officially called the Next Career Support Plan.
Voluntary retirement. That sounds significant.
It's huge. This is where the talk about cultural change needing a sense of crisis gets very real. Rolling this out across the main company and domestic subsidiary.
It shows they're serious about cutting costs, even if it means losing experienced people.
Exactly. It demonstrates real urgency. They want to accelerate the cost savings and presumably create a leaner, faster organization. It's a tough measure.
And it costs money up front too, right? Implementing something like that.
It does. They flagged about 20 billion yen in temporary restructuring costs for 2024, covering both Japan and China initiatives like this.
So again, hundreds of millions of dollars spent now, hoping for bigger savings later. A big bet.
A very big bet. Shifting gears slightly, what about how they treat shareholders through all this?
Good question. The policy seems focused on stability, doesn't it?
Yes, they talk about long-term stability and continuous expansion of returns. Their main tool is the dividend policy.
Which is based on DOE, dividend on equity.
Right, targeting 2.5% or higher. Using DOE, which is based on the company's equity value rather than just annual profit, helps keep dividends stable even if earnings fluctuate a bit year to year.
Which could be useful during a massive transformation like this.
Precisely. And they showed commitment back in 2022 with that special 50 yen commemorative dividend for the 150th anniversary.
Okay. And what about linking management pay to all these goals, making sure executives are aligned?
Yeah, that's quite interesting. They use long-term incentives, specifically performance share units or PSUs.
Meaning bonuses depend on hitting long-term targets.
Exactly. But it's not just financial targets like profit margin or growth. There's also a significant ESG component.
ESG, environmental, social, governance.
Right. For the 2025 plan, Things like CO2 reduction and female leadership ratios actually have a 20% weighting in determining the final payout for executives, along with relative total shareholder return and return on invested capital.
So you only get your full long-term bonus if you hit the financial numbers and make progress on sustainability and diversity goals.
That's the idea. And you can see some results already. As of April 2025, women held over half the board seats, 54.5%.
That's impressive. Okay, so let's try and wrap this up. We've seen Shiseido making some incredibly bold, even painful moves.
Definitely. Selling off legacy businesses, shedding complexity, implementing voluntary retirement. It's all geared towards becoming a highly profitable, focused skin beauty company.
But it hasn't been smooth sailing. That massive $1.3 billion goodwill impairment in the Americas really stands out.
It's a huge red flag. It suggests that while they're brilliant at creating products through their R&D, their big, expensive acquisitions, at least in the U.S., haven't delivered the value expected. A major stumble.
So the big question hanging over this 150-year-old company seems to be, well, twofold, maybe.
Go on.
First, can the financial gains they hope to get from all this painful restructuring in Japan and the focus on skin beauty actually be enough to offset that huge financial hit and apparent strategic weakness in the critical Americas market?
That's the immediate financial balancing act, yes. It's a race against time, in a way.
And the second question may be deeper. Can a company fundamentally change its culture? Can they go from lacking a sense of crisis, as management put it, to being truly agile, using pretty harsh methods like voluntary retirement?
Without damaging the very thing that makes them special, that long-term R&D culture, the scientific DNA that gives them their edge.
Exactly. Can they become lean and fast without losing their soul, essentially?
That's the million-dollar question, isn't it? Or maybe the billion-dollar question, given the impairment. It's a fascinating high-stakes transformation to watch.